lot of pressure that somewhere or the other, once you have introduced a section in the Companies Act, you can't sit tight on that for a very long time, and you must implement that section for the super regulator of the accounting profession. Very frankly, I can dare say that I have been the one who has never opposed NFRA, and either as a president or otherwise. The reason being, I personally feel if the public feels, if the government feels, if the society feels that elected members in the council may have some conflict of interest with regard to the disciplinary proceedings, and particularly in the case of the public interest entities, there is no harm to test any super regulator for that matter. But I still remember my first meeting with the first chairman of NFRA and the full-time member of NFRA, whom I said that institute was blamed. Let me say that for the delays, some of the delays were there. I will not get into the reasons, but some of the delays, significant delays, were on account of the court interferences. The court used to grant the stays, and NFRA would also not be an exception. And I think NFRA has also seen the court cases against NFRA's, firstly, the very constitution thereof, and then, of course, with regard to some of the cases, the stays have been granted. But then NFRA has the backing of MCA, the entire government. Probably it's much easier to get those stays vacated. Whereas in the case of institute, it was slightly different. But I still remember that I spent my 9 months of the tenure, besides doing the IFRS work and the other work in the institute, to get the stay vacated, which had been obtained by PwC at that particular point of time in case of Satyam. And I committed to everyone that before I lay down my office, I will see that the stay is vacated. And I saw to it that the stay was vacated in January, and then within the next 6 months, the disciplinary committee held those people guilty, whatever was to be done. One of the good things which has happened with the advent of NFRA is that probably people have started realizing the significance of independence, significance of auditing standards, significance of accounting standards, and significance of, more importantly, the documentation as well. I think the various orders which have come from NFRA, these do indicate towards the lack of independence. I think in the case of ILFS, all the bigger firms were found to be lacking independence. Because if they were auditing the client here, their network firms were auditing the clients globally somewhere else. They have very clearly brought out the issue of the going concern. They have very clearly brought out the issue of fraud reporting. They have very clearly brought out the significance of documentation. They have very clearly brought out the significance of compliance with the laws, and more importantly, that we cannot over-rely upon the management representations under any circumstances. It is just not possible that you accept the management representation as it is, because when I read SA5, it is very clear that any management representation has to be tested by the auditor for its veracity and for its authenticity. And of course, there are many other issues on which NFRA has passed the order. And one very important order which the NFRA passed recently was with regard to, there are the 2 or 3 orders. I think Vidyadhar will definitely deal with that in his own manner. I'm also not naming those companies. And probably Vidyadhar may also not like to name those companies. One of the companies, the central auditor says that there were 540 auditors. But the appointment of those branch auditors was never on record anywhere. Even there was no resolution of the board of directors to appoint those branch auditors. And then what they have pointed out is that the central auditor had not taken pain even to find out not only that whether the appointment of the branch auditors was legal or illegal, he never ever in his documentation mentioned anything with regard to this particular aspect, whether he has considered the reports of these branch auditors or not. This is one of the very important readings in one of the judgments. The other thing that I came across, the two or three things that I have come across from them is, number one, that if you are giving all kind of disclaimers, you are writing all kind of things that this is not there, this is not there, this requires a provision, I cannot comment upon this, I can't comment upon this, then you cannot issue a qualified report. And I think Gopalji sent me two reports yesterday with regard to MTNL and BSNL. I personally feel very surprised how a qualified report can be issued in that. Either there should be an adverse report in that case, or there should be a disclaimer in that particular case. If you really ask me, you cannot, having given all those kind of qualifications, you cannot issue the qualified report. This has to be either a disclaimer or it has to be an adverse report. And I think NFRA has touched upon it in one case at least. The other thing that I will like to say, that in which the NFRA has come on that particular ground, is that one of the members was non-cooperating. He filed a medical certificate that I cannot come before NFRA, or he was hesitant to file some of the information. And NFRA could find out that that member had certified some of the things on that very date on which he had said that I can't come for the medical examination or I was not well. They have fined him almost 30 lakh or 50 lakh rupees and debarred him for a certain number of years. I think we cannot take these proceedings lightly under any circumstances. And in one of the cases, which I found to be very, very interesting and very rightful judgment, if you ask me, you keep on saying that these amounts are not being recovered, these amounts are not being recovered from the sister concerns, from the other advances. But when it comes to ECL, you say that I am unable to make my mind on that. Arey bhai, if something is not coming for 3 years or 5 years, then ECL has to be computed accordingly. The probability of loss has to go up in that particular case. You just cannot say that I am unable to comment upon it. I think these are some of the judgments which will go a long way to improve the accounting and auditing profession. That's the way I look at it. Of course, I can also think of, and I can dare say, and I think one thing that I find is some of the penalties are very stiff. I think if you levy a penalty on a medium firm or a smaller firm up to the extent of 3 crore or 5 crore rupees, the firm is gone. Not only the partner is gone, it is the firm which will go away. But then I think those smaller firms will now have to look at it, what kind of fees they have to charge and what kind of work they have to execute. But I think these fines are actually very, very stiff, if you ask me. You debar somebody for 3 years, 2 years, 5 years, different matter. But if you fine a smaller firm to that extent, I think it's a very different cup of tea. Now, Vidyadhar is there. I have interacted with him in the institute, in NACAS, and to a very little extent in NFRA also. Vidyadhar qualified as a chartered accountant way back in 1987. So he has virtually an experience of 3 decades. He has the experience of industry as well as the regulators. He was in the institute initially as a consultant, then he was heading the technical directorate also as a consultant. Then he has joined NFRA and he's heading that particular team there also, so far as NFRA is concerned. The best part of it is that he belongs to he did his chartered accountancy from a very small and medium practitioner from Karnataka, DB Kulkarni and company, and from a very small place, Belgavi. So he is one amongst us, basically, though his flair may be for Big Four. I will not like to say anything beyond that. He may like to be siding with somebody, but he himself has been a member who has qualified from a very small firm, from a very small place. So I can know that his heart may be there with the small and medium practitioners also, but his heart goes on to say, please improve your documentation, please improve your working, please improve your auditing processes, the quality control which has to be undergone by in a particular firm. I think that's very, very important. I don't think I have to say much about him because having interacted with him, he has a very firm mind. He is not a confused mind. I can only say. And most of the technical people are generally very, very adamant also, obstinate also, Vidyadharji, and very, very firm in their views. They don't want to listen, no, because whatever I keep on fighting with him on the LinkedIn on certain issues, which are related to the institute or which are related to the small and medium practitioner. That's my and his way of conversation. Because I am my very firm views, he has his own very firm views. But I respect his views also. There's no doubt about it. And I think he must be respecting. I do expect that he should be respecting my views also at some point of time. But I personally find him to be someone who is heading the technical part very well, for that matter. And we do expect in today's deliberations all the various cases which have been decided, at least some of the cases which have been decided by NFRA and their implications. And implications, as I can look at it today, independence is a must. Following the auditing standards, accounting standards is a must. ECL computation is a different ball game. And of course, the going concern and management representations looking into the frauds, all these are to be taken care of. I will stop here, Vidyadharji. I will leave now the floor to you altogether. We are very lucky to have you here today. And I must compliment you that I only requested you once and you immediately agreed to that. Yeah. And it is for the benefit of each one of us who is attending today's seminar and webinar that we'll all stand enlightened with his enlightened views on the various issues. Thank you very much, Vidyadharji.
Thank you, sir. Thank you, Chopra sir. At the outset, I would like to thank, from the bottom of my heart, Chopra sir and GSA Parivar and all other the senior members here who have joined here on this webinar and for giving me this opportunity to share some of my views and experiences on this very important topic which Chopra sir mentioned. Ultimately, the end objective is to quality of financial reporting framework in India. And unless we do that, the overall our economy and our public society etc. may not grow as much as we would like to see that. Like Chopra sir said, I do have plenty of respect for him, and I have seen him at least last say 10-15 years. I've been interacting with him, and the subject very close to my heart, the accounting standards for auditing, is equally very close to him. So that's why he is one of the very few sort of experienced person in India on these two matters, which are of high importance to the society as a whole. In fact, I actually call him father of Indian accounting standards, because he's the one who actually brought in this globally comparable accounting standard framework into India. So he's like the Adam Smith is called father of modern economics. So like that, Chopraji is the father of modern Indian accounting and auditing actually. That is the kind of sort of respect and he commands that kind of a respect across India, definitely, surely. Really thank you for giving me this opportunity, to share my views, and also, just take this opportunity to, explain to the Indian community and others, accountants, professionals, etc., about the NFRA's couple of important activities which have happened, and also plus, as you said, sir, what I have planned over next 45-50 minutes or so is to just highlight some of the important issues which you also brought in with respect to certain few orders which NFRA has passed during last 2 years. These are very important. And then at the end, I would also highlight certain key lessons which one can actually learn from these FRA orders. So I have a PPT which I got presentation. So I will start sharing the presentation and start speak using that presentation. And I hope I am audible and the voice is clear to everyone.
Yes, sir. It's audible, sir.
Yeah. So I will, Kriti, I'll start sharing the screen.
Sure, sir.
Just share the screen.
Yeah.
Sir will be sharing it, and I also have a copy. In case there is need, I will be assisting, sir.
I hope this the screens are presentation is visible to you.
Yeah. Kriti, one request: mute everyone, including me, for the time being, till the time this presentation is over.
Sure, sir. I'll do that.
And like Chopra sir said, the objective of this session is think about bringing about the communicating about how can we improve the system-wide audit quality in India. We are in India, we're a very large community of accounting professionals who are actually serving the whole world also. The whole objective is how can we learn from these lessons and improve the system. And it is not necessary, it is not meant for criticism of audit profession of India or any specific auditors actually. And at the outset also, I'll give you one caveat also. The views, whatever I expressed here, are my personal views, and not that of NFRA or any other members of NFRA or other officials. This is my personal view. And as all of you know, the NFRA is the India's first independent regulator for audit and accounting matters, and which, like Chopra sir mentioned about just about 5 years ago, it took birth in the wake of this some serious scandals like Punjab National Bank and this ILFS, etc. So in the next very quickly few minutes, I'll just give you a very high level overview of various different type of functions which NFRA has done. What are the activities it has done, and then I will go into specifically about certain few of the orders, about 8-9 orders, and I'll just highlight key findings of NFRA and from where what are the important learnings one can take. Standard setting is concerned, whether it is the accounting standards, whether Ind AS or AS or the auditing standard related. Why I'm mentioning this particular aspect is because there are some audit professional in India still think that NFRA will issue some separate set of standards of auditing and accounting, and which it has not done so. But it is not so, as you know that under the Companies Act provision, the standard setting is a joint activity of the ICAI, NFRA, and the Ministry of Corporate Affairs. there are not going to be any separate set of standards which are going to be issued by the NFRA. It's a and ICI has still a big role to play as far as the standard setting is concerned. So as far as Ind AS is concerned, about 47 proposals were reviewed, and then that includes 2 new Ind ASs. One is on the Ind AS on leases, and the other one is on insurance contracts. And then the accounting standards, as many of you might be knowing, which were originally notified in the 2006, but they got re-notified under New Companies Act in 2021. And that was also reviewed by NFRA before in 2021, those were re-notified. And then there was a project on revision of accounting standards, which you have the 27 ASs. And that proposal also had come to NFRA. And after reviewing initially that proposal, the advice was sent to the ICI that it is better to do as sort of a regulatory impact assessment of if we bring in such a high level of standards for companies, there may be a need to do that regulatory impact assessment. And another one was the accounting standard for LLPs, which are currently under review by the NFRA, which the ICA has proposed. And as far as the standard setting, auditing standards are concerned, or the related areas, CARO 2020, which we have been following now last couple of years. These were also issued by MCA in consultation with the NFRA. And very important thing which many of the chartered accountants you are all demanding, that the international auditing are not yet notified under the Companies Act. So what is the status? Yes, currently they are also part of the law, because the law says that until standards are notified by MCA, the ones issued by the ICI are the standards under section 143 subsection 10. So currently we are looking at those 35 standards. And then there were 3 special standards on auditing, SA 800 series, which were also a couple of years back, which were reviewed and recommended by the NFRA. Now coming to another very important area, which is the monitoring and enforcement of standards, whether it is the auditing standards or accounting standards. The NFRA did about 6 audit quality review reports, which some of them relate to ILFS and a few other entities. And then now last year or so, NFRA has introduced a new regulatory tool for monitoring compliance with auditing standard, which is called firm-wide audit quality inspections. It is not individual audit file you pick up, but entire firms. You look at what is the quality control aspect of that firm, and you pick up some individual audit files of that firm and see how it has complied with the standard. That is going to be more a tool as a preventive tool and a sort of a guiding tool for the audit firms to improve upon. As far as the companies, the accounting standards or financial reporting standards compliance is concerned, there is a tool called Financial Reporting Quality Review Reports, which we have done a small number, which is currently a 4, which we have done. And this part is, everybody now we look at the disciplinary area, investigation and disciplinary, but this part is also very, very important if one has to think of making a systemic improvement in the audit profession of any country. This is very important. And then overall, overseeing the quality of the services of audit profession, and again, a tool for a systemic audit quality improvement. The another one is we have issued 3 circulars for everyone, whether it is for companies, for others, to look at certain key areas which deficiencies which were noticed, so that the people can take care of those. And there were some 5 consultation papers which were issued on different areas. And then 8 webinars NFRA has conducted, including the ones which were done during this Azadi Ka Amrit Mahotsav, the Government of India initiative. And then 2 conferences were held. Recently, one was on international conference. And then our chairperson and members are actually reaching out to the various stakeholders and communicating the need for improvement in audit quality, and also the importance of the audit profession. About 20 speeches, various programs our chairperson has participated, and he keeps communicating one very, very important thing, that 5 lines of defense which is required for high quality financial reporting framework. Starts with the management, the finance function, risk management function, etc. of the company, then audit committees, and then independent directors. And third important area is the auditors, which are a very important gatekeepers of this high quality framework. And then comes the accounting, the auditing standards. They also have to be very high, good and effective ones. Then only the regulators can enforce those standards and bring about the change. And the fifth one, definitely the regulators and independent regulators, and even the professional bodies, which have a, like ICA, which have a much primary role to make sure that the professional members are very well equipped to deliver the high quality services which they are meant for, like continuing professional services and other programs they need to conduct. And the today's webinar, where I'm going to talk about this last function, very also an important critical function, which is the disciplinary activities. That is the disciplinary order we call. Last you can say you have seen last 2 years that the activity in this area, and there are total about 89 disciplinary actions, and there are 69 disciplinary orders which have been passed. And a couple of them Chopra sir mentioned, and in my next part of the deliberations, I will also talk about some of the the few important ones. And these through these 69 orders, 15 audit firms have been disciplinary actions have been taken against those firms, and there are 74 engagement partners and EQCRs, engagement quality control reviewers, have been analyzed. And then this involves the audit of about 33 companies, 33 public interest companies audit this relates to. So with this very quick background, now I'll go into the couple of the orders, important orders which you have passed, and I will actually highlight few important findings of NFRA, and from which the audit profession, the companies also the other stakeholders, we can take learn lessons from this and think of making improvements. Chopra sir, is it okay now? I can start with these orders, some of the orders.
I think Chopra.
Yes.
Sir, I think
can go ahead. Yeah.
Yes, please. I think we can start.
Yes.
Thank you.
So the first one, before I go into this orders, I just wanted to highlight one audit quality review report, which was in 2021, which was issued, and it related to a audit of a very large infrastructure conglomerate, which has gone into a lot of financial difficulties and other difficulties, and gone into, I think now the insolvency proceedings are going on. In this order, it was a case where, like earlier it was mentioned, there was a widespread use of emphasis of matters. In the auditing standard, there is a standard which talks about modified audit opinions, which gives you 4 different kind of audit opinions. Auditor will decide based on his findings. And there is also a essay which talks about the emphasis of matters. It means everything else fine, accounts are true and fair view, everything is all right, but still I want to draw the attention of the users of financial statement. Kriti, yes, you wanted to say
Sir,
something?
actually, one of the participants has requested. So can you please also speak a few lines about the composition of the NFRA team? They wanted you to please enlighten us on that.
Yes, if there is a time available, I'll complete this and I'll we can talk about it. Yeah.
That's not of that significance.
Yeah.
Let's be very clear about it.
I agree
Because
with you, sir. Yeah.
yeah, there are members from institute also, very frankly. 3 members, part-time.
Yeah.
Okay.
So this emphasis of matter is primarily you want to draw attention to the user of certain important things in the financial statements. But the financial statements are properly accounted for and they are give a true and fair view. So that's why this emphasis of matter not meant for actually for qualified opinion or adverse opinion or disclaimer opinion. And another thing also, even the standard says that giving too many emphasis of matters also reduces the overall significance of the audit report. But this had about 8 emphasis of matters, and there were 2-3 items there, interestingly, which actually should be qualify for issuing the adverse opinion or a disclaimer of opinion. See, one was about the amount of recoverability issue of trade receivables, some 2,645 crores, and there was an issue of the Competition Commission of India levying a penalty of 1,300 crores, etc. And also the capitalization of borrowing cost, etc. So these are all, if you look at that, it would have resulted in these are items which actually should form part of the adverse or opinion or disclaimer of opinion. This was one finding. Second one was even there were some. It was a qualified opinion, but looking at the impact of the items which are qualified as well as which are there in the EOM, the profit of the before tax of the company of some 370 crores something, which would have actually turned into a loss of 3,200 crores. That was such a kind of an high impact, and you are still issuing a qualified opinion. So here the important point which I would like to draw to the members of the institute and audit profession is modified opinion is not issuing qualified opinion or issuing EOM. Actually, there are 3 different types of modified opinion: qualified opinion, adverse opinion, disclaimer, depending on the severity of the issues where the standard gives. So please understand that it is no longer concept that either issue a clean opinion or just a qualified opinion. It was long back, 35 years ago, that used to be the case, but it's no longer so. And the another area which we found here was there is you all know that there is, apart from audit report, there is a report on adequacy, effectiveness, operating effectiveness of internal control or financial reporting. It is not just you collect some the policy, the company's policy on internal control, and you issue that it is all right. You are supposed to test it, and you have to document what are the control you have tested. The institute has given a very beautiful guidance on that. There is a the guidance note we all refer to in our report, but how, we should actually what it prescribes that how you do the test, what are the tests are going to do, and how do you document it, and if you find errors, what will you do with it? That is not there. And then the another important area was the compliance with the the Ind AS or the AS, this impairment of investment in subsidiaries and joint ventures. See, audit is one important aspect of the modern audit is that whether the financial statements comply with the applicable accounting standards or not. It is not just that we actually do some watching and substantiate the transactions. We also should make sure that the financial statements are drawn up in accordance with that. That is a huge development. That is also one need to look at. And then there was a related party transactions. There are Companies Act requirements, SEBI disclosure requirements. and those all need to be for compliance. Just simply taking the like Chopra sir mentioned, taking a management representation and saying that everything all right. And then very important thing was also in this case was the going concern issue. There was a huge amount of litigation the company was into about the survival of the entity. But then the SA 570 says you obtain management from management, the details of their how they are going to survive in future, and then you conclude. That was also missing. Then of course I will talk about this SA 315 in the subsequent orders also. This has come in. This is also one huge area where you will find this issue, lack of documentation of this area and actual performance of this area also. In many of the orders which you have noticed, there are deficiencies. And another important, very significant deficiency was here. The engagement quality controller has to be independent of the audit team. And whereas in this case, the engagement partner himself nominated himself as a EQC. So these are the sort of findings. It means overall there was a complete lack of understanding of what the SAs require and what the auditing accounting standards require. So this was about the audit quality review report which I mentioned, and now I go to the disciplinary orders. About 7, 8 I have got. So I'll try to see whether I'll be able to cover these all next 30, 40 minutes. One of the case was that we had issued this order in April 2023. It was not a listed entity, but one of the 6 or 7 group entities which were actually part of a large listed entity which was involved in the fraud diversion of funds funds to the promoters to the tune of around 3,500 crores or something like that. And in one of these entities which we of course, although it was unlisted, it was above the threshold described for the purview of NFRA, this company. We looked at this. And one of the first thing was the awareness of the prevailing status of the standards on auditing and the accounting standard, where are those standards, that itself was missing. Basically, the audit firm actually asked us, since NFRA has not issued any standards, so where is the question of complying with the NFRA standard? And another misunderstanding so much that they say that standards on auditing, etc., will not be the basis for deciding whether auditor is done a misconduct or not. These standards are only for guidance to the auditors. That's how they, still we are, thinking about it. But actually, if you see it, at least I know that at the last 25 years, the ICA has issued the standards, and good standards are there which need to be followed. And from 2013 to this has become a part of a statute. But the auditor says that no, these are only guidance. These can't be decided. Then how else will decide the professional misconduct of auditor? And another area was the Chopra sir, like mentioned, was about the independence. Yes, it was in some of the large firms, it's a very major issue. But in this unlisted entity also, it was a major issue. The audit firm belonging to a relative of a sole proprietor, engagement partner of this firm, provided non-audit services to lots of about 27, 30 entities of the group. And many of these entities are all used to divert funds to the tune of around 3,500 crores or so to the promoters of the main company. And yes, the audit files, maintenance and tampering, this was also issue. Audit files are all maintained in Excel, and there is no controls over that integrity of that. Anytime you could change. And when the files were submitted to us, there were a number of files which were changed. And the auditor replies, says that no, we changed them, to make them look good and nice and help the NFRA so that you are able to review properly. But if you see SA 230, it actually tells you, guys, you are not, after the 60 days from the issue of, you are not supposed to change anything.
Sir,
You know?
it's a window dressing is a matter of right.
Yeah, you're right. And there was very interestingly in this company, there were a lot of sort of fraudulent type of transactions of 3,800 crores or so appearing. So SA 240, SA, that is how an auditor should consider fraud, possible potential fraud in audit of financial statement. SA 315 talks about identification and assessment of risk of material misstatement fraud. All this there are nothing, no application of these standards. The audit committee gave approval for 500 crore advance for raw material from another company, but management went on giving advances of 3,800 crores and no approvals. And the auditor doesn't question at all why this is given. So this is one kind of a thing where there's question of professional skepticism and the what we say in our institute, this one, the motto, we are the people who are awake when others are sleeping. That all thing is missing here. And of course there was through routing of these funds through 6 or 7 group companies, there was a sort of evergreening of loans and advances given to these group entities, so that they look like all the loans given are the current ones. And there are other areas of audit like complete absence of audit plan and communication with those charged with governance. Those charged with governance, remember, it is not just audit committee. It is in Indian context, it is the entire independent director, or for that matter, the board of directors you should communicate to. That is TCWG. So, but whereas absolutely there was no such sort of absence of communication there. And of the same group, another company which we looked at for 2018-19. Here also, the question was that completely the auditor, when he starts with, as per SA 315, he is supposed to understand the operating environment, what is the nature of business, what is it doing, what are the, are there any regulations, what control environment it has. Those kind of things have to be documented, and there is a the ICAI guidance note on internal control of financial reporting as well as SA 315. Enough guidance, plenty of guidance, but nothing is mentioned. And in this entity, almost about 100% of the liabilities were all borrowings from group companies, from 6 or 7 companies. And the same amount was all given to some other companies as loans. And actually, it was supposed to be a company which was, involved in buying raw materials for, producing the, coffee and, selling it. But it was only involved in this, non-banking finance company kind of a thing. And it had only revenue of 1.7 crores. And what they did this in case also, these all borrowings were from the the group companies to actually give a different kind of a picture. Like sir said, window dressing, but here it was actually a falsification of accounts. Actually, say they said issued the checks, they for repayment of that without any bank balance. When the checks of some 2,000 crores were issued, but bank had only a balance of 16 lakh. And what happened was the borrowing from related parties went as you were borrowing from banks, so that people will say, okay, they have borrowed from bank and they're doing some activity. So you are hiding this true picture. And if you remember this, so definitely remember, the younger generation may not remember. So there was one case of P.K. Mukherjee in 1960, Supreme Court decided, where the the Calcutta's famous newspaper company, it had provident fund for employees, and that provident fund had given a loans to this famous newspaper of Calcutta. And there also the company just issued the check, and with the intention to tell the provident fund, don't present it in the bank, only show it in your books as your checks hand. So auditor knew this, he did not report. So the matter, council decided against the auditor, and the matter went up to Supreme Court, and Supreme Court also said that this is completely a falsification of accounts and you are professionally guilty. So this kind of a thing, probably similar thing was happening here. And similarly, all these activities were borrowing and giving advances in this company were all financing activities. But in statement of cash flows, all these were shown as trading activities. And the another interesting was when you given loan to the promoters by borrowing from other group companies, some huge amount, 90% of your 80% of your total assets. What about the recoverability of that? And just simply accepted some net worth certificate by one another chartered accountant member, and fine. When we accept this net worth certificates, etc., many times we only talk about the asset side of that individual. Like he's a man of means, high net worth individual and all, but we don't look at what liabilities he has. Because in income tax return, you don't report all those. So that is an issue. And again, there was a clear indication of some fraudulent activities. So that ADT 4 requirement 143.12, nothing was complied here. And absolutely the internal control, though you can see, how this checks, blank checks were signed by various authorized signatories of the bank and were held with the managing director of the company, and he used to use it whenever he feels like he will use it for whatever company he wants to field. He will use those checks. So complete failure of the internal control. But the internal report on ICFR is clean, nothing, no problem. So now I go to another interesting case of a company which has again gone into insolvency and serious problem, which was into cinemas and jewelry and real estate and all that. And this was a joint audit, and I'm referring to only one of the joint auditor. And obviously there was a severe issue of a going concern issue, because company had incurred substantial losses, there were negative net worth, and there were certain businesses were discontinued and default repayment of borrowing. These are all getting reflected in the quarterly financial statements. The auditor was there this firm was there for, it was the second year of its audit. It knew what was happening. But nothing, no questioning about the going concern issue at all. And auditor issued the qualified opinion. And he argued, no, this company has actually gone into IBBI, and there it says that the company has to be revived on going concern basis. So that's why there is no going concern issue. But then why issue a qualified report then? If you felt that it has an issue, then you should have issued as per the standard, then the adverse report, adverse opinion, which this situation of this company warranted. So there was a contradictory stand taken by the auditor also in this. And as far as the audit documentation is concerned, it was in a case warranting too much to be desired from a standards point of view. So I've just put one extract from the order itself. Like it says about the bank reconciliation. Look at it, bank reconciliation check. But how many you check? What did you check in the bank reconciliation? These all have to be your documents. Audit work papers have to speak. The concept under the essays is the audit work papers should speak, not the auditors. So that is the concept. So, there was a huge deficiencies from the critical phases of audit, from planning, risk assessment of the audit to the execution of the audit. This was the case where the auditor should have really questioned, thought about 143.12 before the year end was, because there was suddenly a huge write-off of the trade receivables of 1,300 crores or something. Huge amount of the trade receivables were written off, and inventory had was written off by a huge amount. But there was no questioning of the management and seeking clarifications on this, why this has happened. And then ultimately the auditor filed this ADT4, that is 4 months after the company went into bankruptcy. That was almost about 9 months after the financial year end date. But when he was signing all this quarterly financial statement, it is a listed company, all these factors were evident. So you should have 143.12 says, if you have reason to believe, that is the rules give you a particular process, that you ask audit committee, give them 30 or 45 days time, and then seek explanation. If they don't give, then you report. And even when this ADT4 was reported, there was nothing mentioned about this suspicious fraudulent activities of why this suddenly 1,295 crores of trade receivable, which was a foreign receivable, has been written off. Is there was that export? Was it a real export, or was it a sort of a fictitious transaction, routing of the money? So this was in this particular case, although audit did somehow try to comply with some requirement, but it was too late, and it was not really met the requirements of the standards or the section 143.12 requirements. And another case in July 2023, which we had issued, it was a Mumbai-based entity involved in the manufacturer of it was manufacturer of carbon steel line pipes. And here the issue, we had actually looked at the entire audit done, etc. One of the issues which we came across here was lot of non-compliance with both auditing standards and the accounting standards. See, one was on this disclosure of loans to related parties, compliance with Ind AS 24. The auditor is under such a misunderstanding. Sir, auditor said that I will only report related party transaction if the transactions happened during the year.
Okay.
Then we asked him, what happens to the outstanding which were given in the previous year? No. Standard says if the transaction has happened only. So the true essence of Ind AS 24 itself was misunderstood by the auditor. And 186.4 also requires you to give details of the loans to related parties. Just don't say mention loan to XYZ. Give more details. And this was another big area was the trade receivables. There was a huge risk was increasing there. Like previous year, there was a huge amount, sudden increase in the trade receivables write-off. And the internal auditors reports were continuously showing that there are a lot of litigated amounts. And the auditor has got the reports of internal auditor etc. on file, but there is no questioning to the management. And the provision for impairment loss was a very tiny amount as compared to the entire trade receivables. And in the current year of the audit as well as the previous year, the company had written off huge amount of trade receivables. And the company said in their disclosure, the credit risk is perceived to be low. Even in such a way, how can you accept it? And many companies say trade receivables, we follow provision metrics and loss allowances. But Ind AS 107 requires you to give what are those your provision matrix bucket and what is the amount of loss allowance against each of those. So many people are not giving. This was also another area where we noticed. And another big issue was there was a material subsidiary among the promoters which had some restructuring, etc. And they were, there is a division of these properties. One of the subsidiary was that. But actually, what happened was it, as part of that arrangements, one of the subsidiaries came to the this company. But what happened was there was some dispute, it seems, among the promoters and went to the court, etc. And this company suddenly they had decided a couple of years before this audit that we will not consolidate this subsidiary, which was a material. It was impacting all the balance sheet line item in a material way. And the auditor said that no, there was a High Court order, stay order that don't consolidate. And when you asked in the file, where is the High Court order? There's no High Court order. And he gave some old, some legal opinion given about 4 years ago, which said that it is at this point of a time, it is better to not to consolidate. Who is there to, how can you accept just like that this the letter of a legal lawyer? You need to challenge because essays require you to actually challenge even the lawyer's opinions. So this was another area. And then as far as the audit documentation is concerned, whether it is the risk assessment or whether it is the audit procedure response to risk, it was a huge camouflage, you can say. It was just a collection of pages of trade purchase invoices and sales invoices. So it is for the independent regulator or the ICA's disciplinary committee to whatever they want to check, they can check. You take these 3,000 pages of the invoice. But what have you checked? No. And another area was here, as I mentioned, the trade receivables ECL was a big deficiency. Internal auditor is cautioning you, but you are just ignoring. And then impairment of loans and investment in subsidiaries. There is some Ind AS requires you to do particular way of calculation of impairment loss. And the management gave him some fair value experts report, which had a lot of inconsistencies in the report. At one place he says that he has followed net adjusted assets value method, and another place he says that fair value method. But as an auditor, what you are supposed to do is, for the expert, for the fair value expert, apart from assessing his competency and evaluating what he has done, you are also supposed to actually check, as per SA 540, what data the company has given. What is the control over those data? Is it reasonable? It is simply what is happening, Chopra sir, is many people take these expert reports and file it, whether it is the lawyer's opinion or whether it is the other one. So this was a case which happened in that fashion. And across various areas, there was it is a collection of either the general ledger of the companies or it is the invoices copies. For the benefit of all the audit profession, I am saying it is not necessary that you collect each and every purchase invoice, sales invoice of the company, not required.
But Vidyadhar,
yeah,
which auditor does it? You see, that gives rise to my suspicion. No party will give you the copies of all invoices, either of sales or of purchases.
yeah.
And we are not supposed to take it. Very frankly, this is the record of the company. Why should I burden my Almiras with the record of the client? I have to have my working papers only at the end of the day.
Yes.
The moment I start collecting all this, that itself means that there is some suspicion in the mind of the auditor that tomorrow I will be questioned for something.
Yeah. Yes. Or it may be case when the independent regulator like NFRA asks it, you go and show it to management, take a photocopy and give it to them.
And give it to them.
And this is also one myth we should clear from all the audit professionals in India, a lot of them. Even the samples which you check it is not necessary that you obtain all those copies. You document in your work paper which date number, invoice, which jail account you check, and what is the check you did with reference to that invoice number. Many times you will find this one simply saying that check purchase for 3 months. What is the basis for that? It is not the audit era when Kulkarni passed CA in 1980. That time it was all right. But here it is now, it is a different kind of a era. There is a set of 35 standards which require you to follow certain process.
In our time, it was different. In our time, it
different.
was first month to be done full, last month to be done full, and in between pick up 7 days at random basis of every month. That used to be
when you ask when you ask this question, how you did this, the standard answer comes is, it is auditor's professional judgment. that is a very standard answer. And the second answer is, auditing standards are only guidance for auditors. They are not not to be followed. So although the ICAI Council has warned long back that the new standards use the word shall, it means it is unconditionally mandatory. If you don't follow that procedure, and if you say that you followed in your report the standard of auditing, you are doing it at your own risk. But still, people are need to be made aware of it. And as far as risk, this 315 is concerned, simply saying that revenue risk is pervasive, risk is high, is not enough. There are certain assertions which the standards requires you, whether it is the transactions or account balances, the occurrence, completeness, accuracy. Against each of those, you need to assess what are the risks and design you have to assess what could go wrong and what controls exist or what other procedures I'm going to follow. That itself is completely missing. This you will find in many other cases also. And now I come to this another very recent, you can say, major case where fraud, NBFC, a fraud of 31,000 to 34,000 crores has been, media keeps reporting it. And this is the case Chopra sir also mentioned. There are 250 branch auditors and there was one central auditor. And each one of that had their own version, whether they were legally appointed or not legally appointed. And in the audit report, the central auditor says that he has relied on the, he has dealt with the branch auditor's report, fully well knowing that they were not properly appointed by the board of directors. And then there is also when the NFRA asks for clarification, etc., contradictory statements are given. Sometimes he says, no, I did my audit here using the core banking system here. I have done it. But when you look at core banking system, about that audit, no work is done. And then the question comes, no, we relied on the branches. So at least the central statutory auditor has to be clear of what is, is he going to rely on them? Then make sure that they are appointed legally as per Companies Act provisions. And also make clear to them that they are responsible for something. So this was a case of, like our chairperson keeps referring to some Mullah Nasruddin case, So nobody knows, who is responsible for what. So this was that. And in this process, if you all remember, there was a very mysterious branch, which was the one which was used for siphoning of the funds. That is what the other investigators, etc., have found out. Imagine if this auditor had done his 315 and the internal control or financial reporting, like entity level control, IT general control, who opens the branches, what is the access system. Probably this mysterious branch would have been noticed. Also, apart from that, when you are looking at your score audit, you should determine materiality. You should also see in which all branches this material items are lying, and if you ensure that are you covering or not. That's one very big missing issue when it comes to the multi-location audits. The auditor has to be very careful. You have to first take consolidated all the financial statement, all line items, and make sure in which are the locations they are there. Is there some auditor or he himself is covering some of those items? You might do at the end of the day, sample size audit, no problem. Not necessarily check 100%. But the point is, in your scope of audit, everything should be included. This mysterious branch, is a case like in Satyam also there was department or unit which was there, nobody knew. And similar case had happened in 1939 in US, McKesson and Robbins case, where also these fictitious subsidiaries and companies, etc., were created. So the history sometimes get repeated itself. Again, another case was non-consolidation of a material subsidiary, saying that the control is temporary. And looking at the facts, etc., the control was not intended to be temporary at all here. And this kind of, and a transaction between one group entities were also here, probably created to actually create some artificial profit in the separate financial statements of the parent entity. And consideration of laws and regulations, you all know that SA 250, there is a specific requirement. And as part of the code of conduct, also we are supposed to look at the compliance with the laws and regulations. When here the Reserve Bank of the National Housing Bank, the regulator of this entity itself says that there are some problems of under provisioning, and it has an adverse impact on the capital adequacy of this entity. The auditor just accepts the management explanation and without challenging those. Completely a professional skepticism of auditor is missing. When the prudential regulator of the entity is warning you, you should be careful. Again, in this NBFC case, going concern assumption validation, very important. The asset liability mismatches. When you look at any financial institution, there is always one should look at as an auditor, how do they actually manage their asset liability management maturities? Is there a periodical control? Is there regular monitoring or not? And there are prudential regulator returns going to RBI and other regulators on this for banks and NBFC. Very important to look at that. And as I mentioned, complete lack of proper work papers and identification of risk of material misstatement. I'll just show you. Many times what we are seeing, the auditor says, this is a sample template given by the ICAI for assessing the risk for different line items. They have given you a model. You have to now apply this model to your respective companies and see what controls exist, etc. Many auditors take that and change the name of company and say that yes. And here in one of this case, it says this revenue risk is pervasive. But how do you have to, in your company, when you're doing this template assessing, you have to apply this and see in companies, is it applicable and what is pervasive risk? And simply saying general statement like your audit procedure, sales cutoff to be done. How do you do sales cutoff? Are you going to check some goods received note, etc., last month, etc.? Are you going to try to find out the subsequent to the year end the sales, etc., which have happened, to look at whether the transactions have been recorded in the correct period or not? But that is one which very important thing is missing. What has happened is the ICA has tried to give this kind of a templates to people as a guide, so that you relate these to your individual entities and come out with a good this one. But unfortunately, probably what is happening is people are actually just doing a copy paste of those documents and saying that that is the I have complied with documentation. Now coming to a couple of latest orders which have been issued in April, and just yesterday also there is an order which has been issued. This is also two of the orders I'm going to mention. One relating to this audit of again a non-banking finance company which has actually gone into again insolvency process. There was a suspected fraud of some 12,500 crores here. And this company had a huge public interest. There were some 13,000 crores bank loans and also 32,000 debentures and you can say CPs, commercial papers, etc. you issued. And there were two, but there was no division of responsibility here. So both were jointly and severally responsible, and they were going to do everything. And one of the joint auditors resigns. Many of you are quite familiar with this case. No point in taking name of anybody here. Otherwise, if you take name, our objective of trying to improve this, overall system improvement, it goes into discussion about these audit firms. He did that. So I want to avoid that. So one of the auditors, resigned, reporting suspected fraud, and the joint auditor, he's supposed to look at it when the other auditor has reported, and he has been also informing you from day one that whatever he is writing to audit committee, he's also writing to you. You don't do anything. And then the board of the audit committee and board of directors suddenly after this auditor files the ADT4 and resigns, and board of directors and audit committee tells you, can you give your independent review and investigation? This audit firm very happily accepted. Without actually considering, they should have asked management, you give your opinion, then I will see it. Instead of that, they got into the shoes of management and said that yes, but didn't do anything. And they actually gave a report, clean report, kind of a thing, saying that it is everything is fine, and the auditor actually issues which are flagged are not part of the this 143/12 fraud related reporting. This is not a case for that. Probably the auditor was actually wriggled out of this audit, and he wanted to resign, and he has filed like that. So it is actually case of casting aspersions on another auditors, and that too without doing the proper work. And actually, ironically, the audit firm subsequently, this one which continued, actually the various 13 cases which this firm had, the resigned firm had given and raised concern that the lending to group companies has happened, and these are all with negative net worth and no business. There is absence of credit assessment and evergreening, etc. All that is there. So that's why there is a fraudulent activity. So this firm also went and noted on some work paper some similar concern. But still it goes and says that based on the legal opinion, it is fine. And it gives a some clean check to the auditor. And then the same thing comes as part of a notes. Whatever the auditor has given and included in UOM is same. So effectively, the management, without doing audit committee, without doing its in the independent investigation, thorough investigation at all, just use the other auditor for having a clean check and use the same thing. Of course, on the part of the expected credit loss, the Ind AS 109 or the IFRS 9 requirement, it requires you to, it lays down some very, stringent considerations, especially when it comes to financial institutions, ECL. It is not the same as your trade receivable. It is not that simple. Here it is, you need to have, time value of money concept becomes very, very important. That's why the discounted cash flow approach type of things are very relevant. And you can't use this fair value approach, etc. Because the fair value is different from the ECL provision requirement. It's quite different. Fair value is basically if you have to sell it to somebody else, what amount you will get it on that balance sheet date. But here it is, this ECL is applicable for amortized cost item. So you will assess the future cash flows based. You consider security, etc., but you just don't take fair value and say that it is all right. So, and then the company sometimes, many times they give us this, very, very impressive words like probability of default, loss given default, and all that. But how did you calculate those? They are not simple. And the auditor is not just supposed to take whatever percentage they have given you and just do arithmetical accuracy. So here I would, this point you will see in the next case also, which I'll mention. What my suggestion to all the audit professional members is, employ some credit risk experts here. If you are doing the audits of these financial institutions, and if you face this, and read Basel II capital adequacy guidelines, advanced risk management measurement approaches, these terms have come from there, these three risk factors. And how these are calculated, there is a very detailed requirements which are given. Unless you understand those, you are most likely to be sort of conned by the the management. And there was a case of potential under provision of more than around 6,400 crores or something like that. And remember, SA 540, Ind AS 109, and Ind AS 113, Ind AS 36. They are all lot of judgmental issues, huge possibility of management bias, and sometimes unknowingly management can also make mistake because they are accounting estimates. So one has to exercise a lot of caution in those cases. So as mentioned, just recently we have issued an NBFC belonging to the same group, some 7,900 crores kind of suspected fraud was mentioned there. And this was also a company with a huge public interest of 16,000 crores external debt in the form of debentures, commercial papers, etc. And here the auditors, one of the biggest problem was violation of code of ethics. You started the audit without actually obtaining NOC from the auditor and without waiting for reasonable time. And that too, when the previous auditor has actually reported the audit to government. Remember, this is very, very important thing. Know your client. Like banks, know your customers. Like auditors, know your client, very important. It is not the new concept which has come in now, but if you remember, this was the one which was actually cautioned by the American authorities to Pricewaterhouse in Mackson and Robbins case in 1939. A huge amount of fraud like Satyam had happened there. Had laid down the 1939 some 13 principles they told. One of the principle was check your client, do background check. Don't accept just like that. And then they said, do internal control check, which you see it in that ICFR reporting and Sarbanes-Oxley Act also after a few in US. But this was actually cautioned in 1939. And this was the case which actually changed the audit of inventories also. That Kingston Cotton Mills case was actually disregarded and said that auditor must attend the physical verification of the the management. So this was in 1939. So that's why even very important to do a background check on your client. This is one very important thing which is coming out many of your orders. You will see, because that is where this fraud related reporting lapses are happening. And again, the failure to evaluate the impairment loss for the loans and investments, which are all through some of the group entities without having any real business. there are hardly any employees cost. One can understand this is a finance business. You may not need purchase of raw material, various other this one, but at least employee cost and something should be there, no? But these companies had nothing. And interestingly, in this case, the auditor all documented in the plant procedure. Like I gave that example of that ICA guidance, no, so he documented. And he also said in key audit matter that we will check internal controls and we will engage experts for ECL, etc. But when you see the file, you don't have. And the ECL model, it was primarily based on past due status. And here also the company actually gave information on probability of default, loss given default, and the ECL amount. As I mentioned earlier, these are not just the factors we can just based on management representation accept it. There is a lot of detailed work need to go into the basis of these calculations. And also the Ind AS 109 requires how do you actually factor in the forward-looking information, future economic scenarios, etc. on these factors, and how the historical data has been relating to the current calculations. So, and in fact, if some of you are interested, the IAASB, like in India, we have a AASB, like that internationally IAASB is there, which they have issued a very detailed guidelines on how to audit expected credit loss. It may be worthwhile for some of you to have a look at what are the things to be one need to consider there. So now about the orders, I thought about 7-8 orders, the key points which I mentioned. So I'd just like to summarize what are the key lessons in next 2-3 minutes, and then I will leave it to Chopra sir and you people to deliberate further. One thing is, first thing is the concept of audit has changed. It is a risk-based approach with holistic approach of test of control, substantive test, analytical reviews and all. It is no longer the balance sheet approach which used to follow long back, checking some few balance sheet item, closing balances. That used to be the audit. It is no longer audit. And the checking of the internal controls for financial reporting, or for that matter, even other internal controls, is a must in the current world. Whether this ICFR separate report is there or not, if you look at SA 315, you need to have that. And reasonable assurance of audit. Audit means reasonable assurance. It is not a low level of assurance. Don't take the word reasonable lightly. Actually, SA 200 or some mentions that it is high level of assurance. If somebody is interested in statistical terms, it is 95% confidence level the auditor need to develop in various processes. So this point, many people misunderstand. 40% check ho gaya, theek ho gaya. It is not like that. And then standards on auditing as well as financial reporting standard are part of the statute now. It is across many jurisdictions. India is no exception. And don't ignore this Ind AS rules or the standards on auditing rules when they come in saying they are subordinate legislation. No. Under the Indian Companies Act, these rules are as part of the main statute. They have a similar status. Read this, Supreme Court decision of 2007 in ICA versus JK Industries. If you Chopra sir would remember, AS 22 was challenged in that case. And Supreme Court, I know one of the argument was these are issued by way of a subordinate legislation. Supreme Court warned, without issuing these rules, how will the main act section will be implemented, boss? So that's why don't follow that argument. And auditing standards, others are no longer guidance. They use the word shall, unconditionally mandatory. And apply more professional skepticism. And don't hide behind this jargon of professional judgment. That better it is avoided. And then Audit documentation, very important. Lot of guidance available, whether it is ICA guidance note or other places, but simply do not just copy. It is not like buying a ready-made shirt and wearing it and that's all fine. It doesn't work like that. You have to apply those to the circumstances of that company and assess the risk level, etc. And a couple of critical standards on auditing. It's not an exhaustive list, but I'm just based on what we have been noticing. SA 315, SA 540, very, very fundamental standard. If you do those properly, you will have, I would say that you have done 50% of your work properly. Not in a mechanical way, but in a true spirit. Treat those. And then designing audit responses to the assessed risk. 330 is very important. And sufficient appropriate evidence, SA 500. And another important point is the SA 705, the modification to audit report. Remember, there are 4 types of audit reports: clean report, qualified report, adverse, disclaimer. No longer era of binary reporting. And Ind AS, of course, financial instrument standards, very, very important. They apply to non-banking finance companies or manufacturing companies also. And then Ind AS 36, impairment of assets, very, very critical. Then consolidated financial statements and business combinations accounting. These are also very important standards. So these are the, just to summarize, these are the key lessons based on whatever 2-3 years of NFRA's work which I've been noticing. These are the lessons to be learned. So these are things which I thought I should communicate, sir. So, Chopra sir, I'll hand over the platform to take the things forward.
So we had 2 questions also.
Yeah.
Can we take them up, sir?
Yeah, please.
Yeah, so the questions from Kapil Batra, sir. He says that when the matters belong to listed companies, it directly affects the investors. When the frauds come out, it is the small investor that suffers the most. Do the NFRA provisions include compensating the innocent equity holders through the fraudulent promoters or management assets?
So the that compensation part, etc., is actually a larger issue, which is part of the Ministry of Corporate Affairs or the capital market regulators or the other prudential regulators. The NFRA's job is to identify areas where it can help protect the investors. And even if you see in relation to the fraud also, it is not that NFRA's work is intended to actually go and find out whether there is a fraud, etc. Like auditors 143.12, if we have a reason to believe, during our work of this disciplinary activities or this financial reporting quality review, we are above certain levels, it says that you inform the central government.
The point, Vidyadhar, probably that Kapil has made out is, I have only a sort of a natural corollary to that whatever fines are being collected, whatever penalties are being imposed, why it should not go to the Investor Protection Fund rather to NFRA? Because in that particular case, it may help at least compensating in case of those companies some of the, whatever may be the amount, smallest possible amount, that's not the issue. But probably rather than going to NFRA, it should go to the Investor Protection Fund. That can be
just
considered.
To clarify one point, the money doesn't go to NFRA.
To whom it goes?
It goes to the central government fund. Consolidated Fund of India. Okay. And even in other jurisdiction also, if you see, US is one of the jurisdiction, the PCOB, whatever fines it collects, actually, it is supposed to use it for development of the accountancy profession. It is not supposed to use it for its in many jurisdictions, it doesn't go to the working or the operating expenses of regulator, etc. It goes for different public interest altogether. And that's a matter which the parliament and the legislators will have to decide how it should be utilized. But as
Sir,
of now,
sir.
NFRA, this one, it goes to the Consolidated Fund of India.
Sir, I would like to clarify on a little bit on this. The matter is NFRA, when they hold the auditors guilty, they hold the auditors guilty of not doing their duties when there are some misrepresentations or frauds in the company, right?
Yeah.
That means the fraud is already proven, which the auditors did not catch. Fine. So we cannot say that NFRA does not decide whether the fraud has taken place or not, because fraud has already taken place. Then that's why you are penalizing the auditor, right?
No, sir. This is where is the difference. Our job is to make sure or look at whether the auditor has followed the auditing standards or not. That's our objective. And in that process, we may come across cases where fraud is there, and that we'll have to report it, because the fraud identification and determination of that is a separate legal matter altogether. And there is a separate serious fraud investigation office and others. It is that job. So here, the auditor, that's why very important. This is where the auditors are actually, I'm advise them. 143.12 is intended to help them. They are also there. That is, if they have a reason to believe, then they just report it to the central government and they will take it forward. But that's what is the requirement is, put there. So it is not that, because that kind of identification of actually proving that fraud is a different legal and criminal kind of, you can enter into that jurisdiction.
Kapil, I think, Kapil, one thing we have to be very clear, that when under 132 NFRA was constituted, there are three objectives. Number one, to set the auditing and accounting, to get those notified rather than to set. Very frankly, the accounting standards will be prepared by institute, will be vetted by NFRA, and will be recommended for the notification to the Government of India. Second is with regard to inspecting, that is which improves the quality of the audit basically. And third is the disciplinary mechanism, enforcement. Enforcement is only with regard to the negligence on the part of the auditor to report something. That is what is the role of the NFRA, not the detection of the fraud. Let's be very clear so far as that particular part is concerned. So, Vidyadhar, I have got 2 or 3 questions, very frankly, if you don't mind.
Yeah.
Number one is that, you see, you, in one of the cases, I will not name the case, I will not name the parties, you actually question the independence of the auditors based upon that their network firms had been rendering some of the services to the same auditing client on a global basis.
Yeah.
Now, you have now published some of your inspection reports. Now, those inspection reports make it very clear that those firms have not given you the names of the network firms even. Now, if they have not given you the network firms' names, how can they ensure the independence? And if it is written in the inspection reports of the NFRA itself, what is the next step that the NFRA is going to take against those firms? The firms which cannot give you even the names of those network firms. That is one question. And the second is whether you will ever think of Indianization of the auditing standards from the viewpoint of the small and medium practitioners. That is another question. And the last question is whether, according to you, substantial, because we always have been talking about the debit side, basically, that the provisions need to be created, the provisions were under provided, these were under provided, etc., whether according to ECL or otherwise. To me, one of the very important aspects is where in the companies where substantial amount of payables are written back, creditors are written back, or provisions are written back, that to my mind is more suspicious activity, very, very frankly. Yeah. Because you provided for something in the past, you created liabilities in respect of certain thing in the past, 10 crore, 20 crore, 30 crore for purchases. Which is that creditor who will not claim that particular amount from you if it was a genuine purchase or a genuine purchase of a service or a good? I think that is one aspect that is being neglected by the auditors. And the auditors need to be cautious so far as that particular part is concerned.
Correct. Yeah. So I'll take this, sort of try to answer to the best of my ability. As far as the first point is concerned on independence, our angle comes from the NFRA's angle. Whether the independence, whoever is within the network, are you following those independent checks, etc. or not? And yes, this was a part of an inspection. And as part of inspection, there is always, if their findings are there, it is not necessarily in the first stage itself, it will get into a disciplinary mode. It is an opportunity to be given to the, any audit firms, unless there is a very serious, matters, like we saw in, one or two cases in the past. It is for the, we'll have to see from the next cycle of inspections how whether the auditor has improved or not. Has he complied with that not? That is the whole objective. And the NFRA, this one is also on that independence point of view is network firms. It is not from the point of view of other networking guidelines, etc. is not the focus area. The focus area is from the Code of Ethics point of view in Section 144 of the Companies Act perspective. Is there enough your mechanism and control to make sure that you are complying with that? We go by that norm because that 144 and that requirement is more, even if the firms do not have a control over each other, but are they affiliated, it affects the independence. So from that point of view, from that lens, we look at rather than the the other lens, which the overall professional bodies coverage. So the as I said, inspections when you start, it is a tool for giving a chance for improvement. And of course, if somebody doesn't improve after a couple of this one, then it will follow the in due course it will follow its own provision as per the law. And the third point which you actually mentioned about this right back of liabilities. Yes, there are two aspects. One is which we have noticed so far is all this many people stopping accrual of interest. It is effectively right back or non-recognition of a liability, which you have also in many places you identified such cases. Just because the bank has treated you as the NPA, you want to just de-recognize it, which is from a true and fair view perspective, it is a wrong thing. After 2 years, the bank might give you a concession. That's fine. But as far as when liability accounting is concerned, the conservative principle requires that until the lender or the creditor has released you legally, you don't de-recognize. That is the concept. Even in case of a liquidation basis of accounting, nobody de-recognizes liability just like that unless the lender releases you. Whereas assets, you will be a conservative, you will say that something will not come back, so I will provide for it. But liability doesn't happen. This is one area where many of our Indian audit professionals have got it wrong because the Ind AS 109 uses expected cash flows. When you are calculating effective interest, etc., they have actually misunderstood this concept. So as far as other creditors writing back liabilities, etc., it is yes, there is a possibility that the companies may have written back before they are legally released. That may be sometimes a pure case of the not complying with the laws and then not following the accounting principle. Or there could be also cases where there could be a sort of a siphoning of funds and those areas. Those kinds one has to look at from a different perspective. And all those are from accounting, true and fair view of financial perspective, they are accounting errors. Sir, you asked another question.
Indianization of
second one.
Indianization of auditing standards.
Sir, this the essays which are there currently, which largely they have come from the ISAs. As far as the public interest entities are concerned, you look at the Indies, etc., the way we have actually, the nation has taken that, call, and thankfully you were also one of the important decision makers there. So for those kind of things, I think the going with the international framework is the best thing to do, especially when we are talking about we are the third largest country and all that. We must actually go for full harmonization with international standard, and we should also develop our people to participate in global forums like IASB, etc. And they are not part-time bodies; they are all full-time bodies. And another important point many of our people should recognize is, although the IFRS Foundation, etc., is structured as a private sector not-for-profit organization, don't assume it is some private body of few people. There is a monitoring board which appoints the trustees, etc., which is ISCO and all those, the capital market regulator and banking sector regulator of different countries. Of course, the SEBI and our other people also can be part of that. So from that perspective, they are not private, bodies. They are effectively controlled by some, government bodies. So the another area is the, for example, whether the auditing standards or the accounting standard for small and medium-sized entities, etc. Yeah, yes, it is. There is definitely there is a case one should look at it. And as far as the accounting standards are concerned, IFRS has already got that framework. One should look at it. That was one of the things which was actually mentioned when we returned back the AS revision project to the ICI. There is a paper available on the NFRA website. And recently, I think the less complex entities, this thing has come out at the IASB level. I think still it is not implemented there also. But one can give a thought to that and review that. How good is it? And only one thing should be concern should be it should not lead to a situation we are actually completely diluting our standards, which we have come up to a certain stage. This is one point which we'll have to keep in mind.
Priti, can you unmute Mr. Nikhil Goyal?
Yes, sir. So I have unmuted him. Mr. Nikhil?
Nikhil, you may ask your question. If he has not left.
Sir, he's there, but I think he's not responding. So Mr. Gautam and Mr. Nilanjan also had few
So
questions.
let them ask the question.
Yeah, Gautamji, you can ask.
Thank you, ma'am. So my question is for Kulkarni, sir. Sir, are there no CAs or firms that have come out clean out of NFRA's inspection? We only see the ones where there are some sanctions or penalties that have come up in past 3 years. No CA or firm has come out clean out of NFRA's inspection.
See if you see the inspections which we have, published these 5 reports. In that, yes, in the first year we have some inspection items, but you never know as the situation improves over a period of time now. In future, you see in PCOB reports also, sometimes you see that there are no inspection findings. We never know if let's hope for that kind of a situation. Like our chairperson says that I don't want to write any disciplinary order. That is the kind of situation I would like to have. So with the kind of all your efforts and initiatives, let's hope that we will come to a stage where we are going to have a very, very minimal kind of observations and inspections also.
Maybe something like,
because
okay, there were few observations, but this did not lead to any penalty or debarment of any that nature. So that it is very uplifting for the CAs as well, that okay, somebody has at least come out clean. And I think, as rightly said, PCOB follows the same, that okay, nothing has come up, or they issue their different variety of reports. which are at times very clean also. So that's just a suggestion from my side. Maybe that helps the CAs in practice to be motivated towards the audit practice. That's it. Thank you, sir.
Nikhil, I think you are unmuted by Kriti. You have to unmute from your angle also, from your side. Anyone else?
Yes, sir. Mr. Nilanjan is there. He has a question. And Kapil sir, we'll just after Mr. Nilanjan. Thanks.
Thank you, Kriti. So I just wanted to ask this question on fraud reporting, and I think we saw that topic getting resonated in a couple of the orders. So, sir, when you had those observations, how did you found the understanding or the applicability by the auditors on the guidance note issued by the ICAI? I know at a certain point in time, there was a view that if there is the auditors itself has not identified a fraud, then it is not reportable. So was that used as a kind of a refuge or as a safeguard for the auditors to report or not to report? Or you find, that was used in the right spirit in performing their obligations?
Nilanjan, we issued a circular also on this.
Yes, sir.
To actually alert everyone. There we were just reiterating what the company law provisions talk about it. It is not that we are trying to intention was to point fingers or find with other interpretations or other things, but what the law requires, that's the whole sort of an objective. For example, look at the case. Just think about from this kind of a perspective.
Yeah.
Yes, there are many different places. Maybe the fraud gets reported. But see, as far as the Companies Act is concerned, Ministry of Corporate Affairs, SFIO, and how will they come to know about it?
Sure.
You just think about it. There is a statute. On the statute there is a requirement. You do this. And there is a body which is created specifically for that. How are they expected to do that? So for them, the auditor is a very important, eyes and ears, for the Ministry of Corporate Affairs and central government to have a sort of a holistic picture of, what all is happening in this field. That's a bigger, objective behind that. So we have to keep in mind that objective in mind and then do it. Otherwise, there might be many cases. There might be somebody,
Sure.
some company went and filed an FIR about a fraud.
Sure.
But how will and it may involve a company. How will the Ministry of Corporate Affairs and SFI will come to know it?
Sure.
Police is not going to come and inform them, and the
Yeah.
company is not going to inform them. So this is the whole, sort of a underlying real objective you keep in mind. That's whole purpose of that. So that
Sure.
is how the circular is only just reiterates what the requirements of that.
But Vidyadhar, I think this is a matter which must be resolved between the institute and NFRA, to my mind. Because if I read the section says, notwithstanding anything contained in this section, if an auditor of a company in the course of the performance of his duties as an auditor, let's be very clear about it, has a reason to believe that an offense involving fraud is being or has been committed against the company by officers or employees of the company, he shall immediately report. It means he has a reason to believe. If it is already committed and if it is already reported, then it's not a reason to believe. In that case, he knows that there is a fraud. And then in Caro, there is already a clause in which he will report that whether any fraud has been committed and reported. So to my mind, expecting auditor to report on the frauds which have been noticed and detected by the management is a bit far-fetched. But in any case, I don't want to comment on it right now. I will say that it is between NFRA and Institute to sit together, talk to MCA, and find out what is the real objective of it, and do some and take some remedial measure.
Yeah,
Sir, it is, I
maybe
think in the order, it is, quite well, all these provisions, whether it is the future, past, committed, or all that. I think quite a lot of this one is there. Probably, as you said, it is better that, left it at that stage, rather than, sort of, again, we will have a lot of different kind of interpretations. We'll have that. Rather it might further confuse the situation. So best thing is the NFRA's order is there on the this one, and it gives an elaborate this one. So maybe that's the way to go about it.
So
Okay.
Thank you, sir. I
maybe
have
we
one
can-
question. Yeah.
Sir, maybe we can add one phrase onto this, which is the fraud which has not already been reported to the appropriate authority. Then auditor have the duty. Maybe that is the such modification can be done.
That's for the parliament to do that, because it's the Companies Act, and the legislators will have to do it in their wisdom.
But you have to you can suggest, no, sir, if being the people who implement that. Yeah.
Any other question?
Yes, sir. Sir, I have two questions. Sir,
Yeah.
one is, and thank you for unmuting me. See, my first question is with regards to section 132, right? Now, section 132, it says that for means if you go to rule 3, then it says that certain specific class of companies which are covered under this particular rule is something where NFRA will have the jurisdiction, and any other institute will stop the proceeding if the proceeding has been initiated under this particular section. Now, say if NFRA has not initiated any proceeding, does it give power to ICAI to initiate proceeding against those companies which are under Rule 3? Is there overlap in this particular jurisdiction?
To my mind, if you ask me, for that certain class of companies, institute will not be able to do it.
I
It
think,
is
sir,
only
this
in
is
respect
also
of-
a
because-
legal matter,
because
legal interpretation.
there is a legal
Maybe it
matter
is
in
left to
any
the
case.
courts to or the legal this one to think about it actually.
But Vidyadhar, I
Yeah.
think one of the points which need to be answered is
Yeah.
that even in case of the companies which are not covered by the class of the companies, if there is a regulator or a government actually filing a complaint, then FRA will have to take it up.
Yeah,
There is no
yeah. Even for
that's
individual,
also very clear.
even for
Even if the
individuals,
class of companies is not
central
covered, if
government
the
can
class of
refer.
companies is not covered,
Yeah,
but if there is a complaint by the government or by a regulator, then also this complaint will be taken up.
you take a bit. Yeah,
Yeah.
you're absolutely right.
Sir, my final question actually is coming from your presentation only.
Yeah.
You said that you found cases where people had said that we have this procedures, but they were never performed.
Yeah.
I have discussed with at least 5 to 6 external auditor firms. Whenever I ask them, can you share with us the work that you have actually done on the risks that you assessed at the beginning of the audit? They never share. See, the thing is, the people charged with governance, mainly audit committee, they are responsible to assess the performance of the external auditor.
Yeah.
And external auditors, they bluntly refuse to share their working papers. The company is paying fees for the audit, right? They are paying fees for the work.
Yeah.
But the company cannot ask to assure themselves that they actually did the work they were supposed to do, especially on the risks that they assessed as a high risks.
See, auditor is supposed to comply with what the standard requires. 315 very clearly, tells you, what are the things you do. And also, SA 260 and 265 talk about informing the management also. Yeah, definitely the TCWG and audit committee also should ask the auditor, in their interaction, some of these, questions. And as I mentioned, see, all these 5 lines of defense need to work. If any of the lines is not working sometimes, it can actually create a, the system can, fall through. So from our perspective, the regulator perspective, yes, the auditor is expected to have a good evidence of how he has complied with these standards, etc., including communication with the company and the TCWG and others, and his work done. If some companies, if there, I don't know the context in which you had requested to give it, but it's difficult to comment on those. But our findings, you can see from our orders, etc., there are cases where quite a lot of so this audit documentation deficiency has been noted in these cases.
You're right, sir. But
Sir,
why does the standard provide protection to this to the audit firms that they refuse to share their working papers with the audit committee?
No, but I think, Kapil, if the audit committee asks them the questions, they will answer the question, and they will say how the other risk has been assessed. I can tell you, I can tell you, I also sit in the audit committee as the chairman of the audit committee in many companies. And I can tell you, each auditor has told us how he has assessed the risk. No one has refused. No one has ever refused. It is also for the audit committee chairman to ask that question.
Sir, I am telling you from the practical experiences. They tell you how they assess the risk. What did they do to check and satisfy themselves that that risk has not materialized? This is what they never share.
Maybe I think a topic which can be debated, but I think all good things have to come to an end. Vidyadhar, we had bargained.
Sir, I have, sir, sorry, sir, I have.
So Mr. Nikhil
Sorry,
is
sir, I have.
Mr. Nikhil.
Sir, I have. Sir, now just because audit committee question was going on, I have just 2 questions remaining with me. Just 2 questions. Sir, with regards to NFRA orders against the auditors, fine. We penalize them. It's okay. But see, ultimately, somewhere management is also responsible. Somewhere audit committee itself is responsible. Section 134, subclause 5, it says that all these assessments have to be done. So, what is it that is happening to even bring in the audit committees and management as party to all these particular aspects? Because there cannot be only one person who can be responsible. There has to be many. There has to be independent directors who did not review the results. There has to be audit committees who did not review the internal controls, or they did not review the related party transactions. There could be n number of issues. And sir, second question I have is, one is, I'm not into auditing practice, but I follow the NFRA orders. I somewhere find that the principle of hindsight is being missing in the orders. Like, see, if I am certifying, say, going concern, if I was auditor of Go Airlines, right, and I certified the balance sheet on, say, 30th May, and in June, management declared that, okay, now we are a going concern. Now, there has to be some weightage given to the hindsight as well, right? That is something that, which I do not see. Means, I'm not sure how it is evaluated amongst the regulators and everyone. I'm not sure. I'm not even experienced to comment about it. But मतलब I'm just saying कि आज मेरे सामने जो है वो आज ही मेरे सामने, मतलब वो कल नहीं होगा. And tomorrow situations might change. These are the 2 limited questions I have. I know we are constrained of time. It was a very nice discussion, but these are the only 2 questions I have.
Vidyadhar, can I take these 2 questions?
Yeah, please, sir. Yeah. Only expert like you can answer this.
So far as this audit committee and the directors and CFOs are concerned, I think now at least some action has started. I will only say. Earlier there was no action, but this is a matter of debate. And very frankly, NFRA does have a jurisdiction over them. And I can tell you, sitting over in the disciplinary committee of the institute for 4 years as a government nominee. I sent certain cases to MCA where we found the directors to be totally negligent and directors to be conniving basically. But I have not seen any action on the part of the MCA so far as that particular part is concerned. So I'm very clear that probably in the times to come, something may materialize in this particular direction. And your second question was with regard to
Hindsight, sir.
Hindsight. There I fully agree with you, and this is one thing that I wanted to end up on a note with Vidyadhar, that probably we must realize that so far as going concern only, I am only talking of the going concern. So far as this going concern is concerned, auditor at a particular point of time might have been guided by certain factors. When we see today, yes, the firm had gone, everything had gone, so or the company was gone. So we are looking at it. And another thing that one will like to say is that reading an audit standard word by word and line by line, probably no auditor will be able to comply with in practice. And probably the auditing profession will be in a different, will be seen in a different way. I think somewhere or the other, some practical aspects have to be taken. And I think the point of hindsight that has been brought in has some merit, which probably today NFRA has come into existence. It is in its infancy. Let's be very clear. We should all give them that benefit of doubt. And so far as they have been doing an excellent job, except for the fact that somewhere or the other, we find them to be far more stringent than probably we could have expected them. Let's put it that way. So maybe in the times to come, NFRA will have the benefit of the more cases, and NFRA will be more tuned to the Indian auditing profession, and probably this benefit of hindsight in certain cases might be given in the times to come. That's all I can say. Because somewhere or the other, at least in the going concern case, I don't want to dispute about ECL. I don't want to dispute about those checks in hand, etc. I don't want to dispute about the fraudulent cases. But yes, in the matter of going concern, somewhere or the other, I think the hindsight matter would come into play.
Actually, but sir, I was discussing this with one of my lawyer friends. इसमें क्या है कि BMW की value BMW जितनी है unless कि वो ठुक जाए, तो अचानक से value गिर जाती है, no one can do anything.
No, I think I will not like to compare BMW with some of the debtors or some of the other investments. I will not like to do that. But at this end, Nikhil, I think we have already overshot the entire time. But I must say it has been one of the most wonderful webinars that we have conducted. Thanks to Vidyadhar for all his inputs that he has given us, whatever he has shown us, whether it has been with regard to the qualified opinion or with regard to impairment of investments, internal controls, related party transactions, going concern, etc., etc. I think there are a number of things that he has discussed. Really grateful to you, Vidyadhar. I personally feel, and I've been talking to you personally, people have to take the auditing standards in the right spirit. I don't think we can continue to be what we have been. We have to improve upon the auditing processes in the times to come. There's no doubt about it. My gratitude to Kriti for that matter, for actually doing all this paid work, for bringing us together today. And of course to Vidyadhar again for really accepting our invitation spontaneously. And to all those participants who are there even right now, almost 100 people joined us through the Zoom, and many more are on the YouTube also, very frankly. And I'm sure that today's webinar is an eye-opener to the auditing profession. Thank you very much, everyone.
Thank you so much. Thank you.
Thank you, sir.
Yeah, thank you. Thank you,
Thank you, sir. I'll log off now.
Yeah, please.
I'm closing the meeting. Thank you, everybody, for joining in. Thank you so much.